Hi, welcome again to today's edition of Market Analysis for October the 12th. I'm Giovanni Benacourt, operator and educator with Vantage Markets. Well, by now, we all know the situation. The labor market is strong, inflation still hot, and the Fed's nowhere near backing down. Treasury yields and the dollar are moving perfectly in sync higher, and the stock market is going in the opposite direction. For investors, nothing matters more than the two inflation prints coming out. Today we received the PPI. We were looking for 2/10, and we got 4/10 on the PPI. And tomorrow the CPI will be out. We will do out. Now, take out food and energy, and the annual rate is expected to climb. And here's the thing: economists have been underestimating data lately. The City Economic Surprise Index, which tracks the degree to which data are beating expectations, is positive and climbing since the summer. Assuming the trend holds, we are more likely to see warm figures than cool ones. If that happens, we may see the highest VIX reading since the pandemic first began. The Volatility Index has been on the rise since August, holding above 30 this month as stocks slipped to near year-to-date lows. Yet so far, the selling has been a slow, steady drip. VIX hasn't been over 40 since 2020. In the 10-year yield breaks back out above its high of 4%, and the US dollar goes along with it. The next leg of selling will likely be the most intense yet. So far, this bear market could be best described as a fairly standard valuation compression of expensive stocks. It's far from the first time the Fed has killed a bull market. What's truly unique about today is how hard government bonds are falling alongside stocks. We are breaking all kinds of records in bond markets and their relationship with stocks. VIX doesn't really trade above 40 outside of crisis. If this week's inflation data are the straw to break this weary camel's back, we may have the first crisis of too strong economy ever, and the risk of pandemic in bonds could bring unprecedented outcomes. If the numbers come in the light, VIX should be fast to retreat back down to the 20s, as it has repeatedly throughout the year. The worsening prospects for the global economy point to continued strength for the greenback. The International Monetary Fund predicted yesterday that growth worldwide will slow to 2.7% in 2023 from 3.2% in 2022. As the global economy is headed for stormy waters, financial turmoil may well erupt, prompting investors to seek protection of safe haven investments such as US Treasuries and pushing the dollar even higher. Now, here's what a strong dollar means for stocks as earnings seasons begin to heat up. Don't set your hopes too high for quarterly sales. According to Goldman Sachs analyst, who said in one note that the strong dollar will weigh on the S&P 500 companies, which are often multinational corporations with significant international exposure. The dollar has been among the best performing assets of 2022, largely on the back of aggressive rate hikes by the Fed. And in the third quarter, the trade-weighted US dollar rose by 9% from a year ago. So, warning that fewer S&P 500 firms would beat consensus sales forecast is short-sighted. Now, the move in FX means most firms will announce in the third quarter results in regular terms, but will undoubtedly emphasize their performance on a constant currency basis. And for companies that do a lot of business in Japan, the weak yen will likely remain in a headwind. Prime Minister Fumio Kishida said he supports the Bank of Japan's loose monetary policy despite the yen sliding to a two-decade low against the US dollar. In an interview with with the Financial Times, the premier also dismissed speculation he will cut short BOJ Governor Haruki Kuroda's tenure. While most central banks are raising interest rates to combat high inflation, the Bank of Japan has kept interest rates in negative territory and has maintained a cap on its 10-year yield via bond purchases to fight deflation. And while a strong dollar helps keep prices of imports down, inflation in the US remains near four-decade highs, and Thursday's Consumer Price Index report could deliver another blow to the S&P 500. And keep this in mind, if the reading tops 8.3%, then expect the stock market to sell off by 5%. But readings below 8.1% could spark some big gains for the stock market. Now, sometimes it pays to be an optimistic. As a politician, President Joe Biden is in the business of making people feel good about the future. Biden doesn't think there will be a recession, or if there is a recession, he said it'll be a very slight recession. That's not much comfort from someone who needs to ease the economic fears of voters ahead of midterm elections next month. Now, Jamie Dimon, the chief executive officer of JP Morgan, sees it differently. He says there will likely be a recession in 6 to 9 months. The combination of inflation, rising interest rates, and the war in Ukraine mean that the situation is very, very serious. Now, with that being said, let's take a look at what we can expect in the financial markets today. In front of us, we have the S&P 5, the Nasdaq 500, the Nasdaq 1000, sorry, of the Nasdaq, and obviously we are way below our psychological level of support, now resistance of 11,000. So now that's going to turn around into resistance. We traded on the 10th pretty low. We went as low as 10,760 and 60. I have my support at 10,750. We could probably mean that could be raised. Now here we have a hammer in this daily chart. We have a hammer, and that could mean that the market could find some support. But the reading that we received today, it wasn't that positive. So some of the markets could be opening in. What's open right now? No, will be opening on a downside. Let's see what will happen when we open. Will the market come still off, or will it rebound and start trading higher? Here, from on the S&P 500, we have the same token. We have the same type of candle being presented on a daily chart. So we could probably expect that, or we could probably expect the market to sell off, make another attempt at another low. Right now, we are trading right at a psychological support level of 3,600 on the S&P. Here we have crude oil. Crude oil is really looking to stay above the 87 mark, and that's what I'm gonna change my support to, $87. So let's see if that will be the case. Now, the RSI is not even in overbought territory, nor even in oversold territory. So will we continue to see that push down on crude oil? It is expected. So most likely, if we do break the $87 psychological level, then we're gonna come out looking to take out the previous lows, that previous low, and that will be real close to a psychological number of 84 and a half. So we will find that support around 84 and a half today if the market does happens to enter into a sell-off. Then we have Nat Gas. Nat Gas is just really looking to trade around the pivot point. Is lingering really below, close to the oversold territory on the RSI. So let's see what will happen. The 200 moving average, however, is acting as a support for the market so far. Let's see what will happen. Now we have here gold. Gold is really holding off on the 1660 psychological level. Support is right there. We have the 52-week moving average coming down towards it, acting as a resistance. So let's keep that in mind. Then we have here our silver position. Let's just update our support. 1850 will be the one for today. If that was the case, for the market to come down towards it, RSI is really flat. So the 52-week moving average is above the market, putting some pressure on it as a resistance level. So what we see, will $19 being a psychological support level hold today? Let's see. Then we have here copper. Copper has really just been in a range, not really making any bigger moves. I expect copper to continue doing the same. And then we have here Bitcoin, and Bitcoin. That's a really volatile asset. 18,750. That's where I'm gonna put my support, and then I'm gonna have my resistance right around here, 1950, around this. Then we have here the euro. Euro is really just flat honestly around the 97 handle. Then we have US dollar Canadian. As the crude oil drops, we can probably see that Canadian rise 139. That's why I'm going to have my support, my resistance on that. And then my support, my pivot is going to be right here. And then I'm going to put my support at 137 for the Canadian dollar. And we've seen how the dollar continues to climb. Will we come back to 115? That's yet to be seen. I'm expecting the dollar index to sustain above 113, and that will be something that we will keep an eye on as the dollar index continues to stay above 113 and pushes higher to 114. We're going to see some sell-offs in gold and other assets. So keep that in mind. All right, that's it for me right now. Have a fantastic trading day.